Wall Street disappointed by retail sales data. It's a test of the idea that the economy may be bottoming out. Stocks fell today after an unexpected drop in retail sales and producer prices tested a notion that the economy is starting to find its footing. Perhaps not. No, there's something fundamentally wrong with the economy. The recession, worldwide recession or depression, is ongoing, continuing. The poor showing for retail sales in March and a sharp drop in wholesale prices overshadowed better than expected profit reports from Johnson & Johnson and Goldman Sachs Group Incorporated. Financial stocks showed some of the steepest losses even after Goldman's results came in well ahead of what economists had been expecting. Citigroup Incorporated and J.P. Morgan Chase & Company are also due to report quarterly results. Wall Street couldn't avoid disappointment over the Commerce Department's report that retail sales fell approximately 1.1% in March, the biggest drop in 3 months. And when they stand up, they're always falling back down, going backwards, not able to go forward, not able to progress. Economists polled by Thomson Reuters had expected an increase of 0.3%. And one small bright spot. February retail sales were revised to show modest growth rather than the slight dip originally reported. The Labor Department said wholesale prices fell 1.2% in March as the cost of gasoline, other energy products, and food fell sharply. The choppy, uneven data that we're seeing, whether it's economic or earnings, reminds us that we're still not out of the woods, said the head of fixed income management at SEI Investments in Philadelphia. The government also said businesses reduced inventories by 1.3% in February, close to the 1.2% fall that economists had been expecting. Investors had been hoping businesses would be able to work through inventory and better align costs with demand. The mixed information or data could keep a useful check on the market's advance. The market always has a tendency to go too far, too fast. The drop in stocks followed more signs that companies reporting earnings for the January-March quarter might possibly be able to beat Wall Street's modest expectations. Johnson & Johnson said its first quarter profit dipped, but not as much as expected. J&J, one of the 30 stocks that make up the Dow, rose 82 cents, or 1.6%. Goldman unexpectedly released its results a day early, reporting at the closing bell, but it earned $1.66 billion in the quarter, well above what economists had been expecting. And the dollar was mixed against other major currencies, while gold prices fell again. There is something fundamentally wrong with the economies of the world. And change must happen. Change must come. Everything that can change must change. It must change rapidly. So then, consumers were not shopping in March. The report from the Commerce Department has shown. Sales are down 9.4% on a year-over-year basis. The economic slowdown and forecast for weak demand will affect gasoline prices also this summer, the Department of Energy has said. Summer fuel prices will likely fall to the lowest level in at least 4 years. March was weak across the board. Auto sales fell 2.3%. Electronic stores saw sales fall 5.9%, and clothing retailers posted a 1.8% decline. Last week, a March retail sales report from the International Council of Shopping Centers showed a drop of 2.1% year over year, which was worse than economists had expected. While the March data isn't enough to make us rethink expectations that the worst is over, it does serve as a reminder that the road out of this recession might be as painful as the recession itself, said the chief economist of Janney Montgomery Scott. In other economic news, the Producer Price Index declined 1.2% in March, the Labor Department has reported. Energy prices fell 5.5% last month, and food prices were down 0.7%. The PPI is down 3.5% from March 2008, which is the biggest annual decline since 1950. Once again, and when they stand up, they're always falling backwards or falling back down. Never able to go forward, not able to progress. Economists had expected the PPI to be unchanged in March, but they have found out otherwise. The Core Producer Price Index, which strips out food and energy components, was flat last month. And once again, all these signs are connected to everything else that's going on around the world every day, day by day, which in turn is connected to the end times transition days. The transition is ongoing. It is still happening. And it must happen rapidly. Everything that can change must change. These are all more signs, day by day.